Welcome to Module 15, where we will be spreading the transaction comp for Adidas' acquisition of Reebok. Now, this comp is definitely going to be an outlier since it is a very, very old comp. Everything else we're trying to use is relatively recent, and I know I mentioned in Module 14 that the common theme across all these is that we're really trying to select for recent things that have similar business lines. This is the one outlier where it's so substantially similar to Nike. We think it's worth at least spreading to take a look at, and if the data is way off and if it's not useful, you can always throw it out. But this is sometimes in cases like these, even if it's really old, sometimes it can be valuable to look at. And I think this is a nice thought exercise as well for us to just analyze this and really determine on the back end, is this relevant in the end, or should the data point be thrown out? So I will say that this would have been an excellent comp and probably the best precedent transaction had it occurred, let's say 3 years ago rather than 15 years ago. But nonetheless, we think it worth it to take a look at. So to give you guys some details on the transactions, the date it was announced was in August of 2005. The deal type was also public to public. So we know Adidas is public. Reebok was public at the time of the acquisition. This was also an all-cash transaction, largely comprised of cash on hand from Adidas, as well as cash available from an existing $2 billion revolver. And the reason for this was Adidas' objective was to maintain an investment-grade credit profile. So they had to take out a ton of debt to fund this. There was, I think, some concern that they may lose that investment-grade status, or their debt may have received a lower rating. Now, this one actually did come with some synergies estimates. There were cost synergies estimated in the amount of about $150 million by the third year after closing. So something definitely worth noting. Now, to walk through some considerations of this transaction for our analysis, I think where this is relatively similar is Reebok was similarly an industry-leading player with some premium branded apparel and footwear. I mean, Nike definitely merits even more of a premium just due to its size and margin, but nonetheless, the business lines were relatively similar in that regard. And furthermore, and most importantly, I think just that this is a highly relevant precedent transaction. But sadly, given the age, it's likely not going to be meaningful to our overall analysis, as it took place under very different capital market and financing conditions with overall different market sentiments. So it's certainly in an extremely comparable line of business to Nike, albeit a little bit smaller. So as I said, this is substantially similar, but it nonetheless is a relatively outdated comp. But with that said, we're going to spread this data and take a look at what we get.